Hello again, everyone. Chuck Driver here. If you spend a lot of time on the road like myself, plugging away at the miles, driving for gig platforms such as Uber, Lyft, Amazon Flex, DoorDash, etc., then you might have asked yourself, what vehicle expenses can I claim on my taxes? And in this video, I'll answer that question by explaining the difference between actual expenses and the standard mileage deduction rate. But first, a disclaimer. I am not a tax accountant. This video is only intended for informational purposes and a guide to help organize your 2021 taxes. Please seek a professional tax accountant for specific advice. So if you use the actual vehicle expenses method, you're allowed to deduct gas, oil changes, tires, maintenance and repairs, vehicle licenses and insurance, vehicle rent or lease payments, and vehicle depreciation. Or if you use the standard vehicle mileage rate method, you are only allowed to deduct the 2021 mileage rate of 56 cents per mile, and none of the prior mentioned deductions under the actual expenses method are allowed. So which method should you choose? Well, let's go through some scenarios to help you answer that for yourself. With the actual expense method, think higher price and lower miles driven. You will get more bang for your buck here if you purchase or lease a new vehicle that you plan on driving sparingly for rideshare. Compared to and versus the standard mileage rate method, think lower cost and higher miles driven. If you drive full-time for rideshare or in the gig economy, you will get a way better deduction purchasing a gently used, inexpensive vehicle. Scenario number 1, using the actual expense method. You drive very little miles and use your vehicle majority of the time for gig work. You decide to purchase or lease a new, expensive car for $700 a month for majority business use, and because it's a new vehicle, let's say you have very little maintenance cost annually. You have $2,000 annually fuel cost, $400 annually in oil changes, $3,000 annually for car insurance, and $120 in new vehicle registration fees. That's $14,220 in actual costs that you can deduct based on the actual expense method. Based on this scenario, you would have to drive more than 25,393 business miles to get that same deduction using the standard mileage rate method. And since it's a lease or a brand new car, I would not suggest putting those miles on it. That would just be stupid. That's why I say higher cost, lower miles when choosing this method. Scenario number 2, using the standard mileage rate method. You drive a lot. Practically you are all over the place, working just one or multiple gig jobs. Hundreds of business miles per day, thousands of miles per month, approximately 45,000 business miles per year. You purchased a used, inexpensive car because you are smart and understand that putting high mileage on vehicles depreciates their value very quickly. So it's $350 per month, $1,200 annually for maintenance, like tires, brakes, and rotors, $5,250 annually for fuel cost, $880 annually for oil changes, $3,000 annually for car insurance, $120 in new vehicle registration fees and taxes, for a grand total of $14,650 of annual expenses. However, since you drove 45,000 miles and are using the standard mileage deduction rate, your actual deduction using this scenario is $25,200, and yet you only spent $14,650. That's over a $10,000 difference. That's why you get a way better deduction with this scenario, especially if you're driving a used, inexpensive car that's low maintenance. Like I said earlier, think higher mileage, lower cost when choosing this method. Other additional write-offs for gig work are a cell phone purchase and its data plan, monthly subscriptions like Sirius Satellite Radio, Spotify, and Apple Music, car washes, cleaning supplies, vehicle tint, AAA roadside assistance, car chargers and phone cases, tolls, and high-visibility clothing and boots. It is considered a write-off if the purchase is for business use or the customer's convenience. However, please always check with your tax account first before using these methods or write-offs, as tax laws can change at any time. Please comment below if you have something to add or if I missed anything, and please share in the comments below your experiences and advice on this topic. Thank you for tuning in, and please subscribe so that can help grow my channel, and I look forward to seeing you in the next video. Chuck Driver out.